Welcome to WTF, West Bank Talks Finance, where we clear up those what the finance moments by answering your frequently asked questions.
What are some car finance tips for first-time buyers? We've got 4 valuable tips to help you take on the world of car finance head-on. Number 1, budget. Probably the single most important step. Work out your budget first. Buying a car is a long-term commitment that involves paying every installment for the next few years. Remember that you also need to factor in those other car costs like fuel, insurance, and unexpected repairs after hitting that pothole again. So crunch those numbers before you get stuck into the fun stuff, searching for that shiny new ride. Here's a simple but very effective hack for test driving your affordability before you take the plunge and commit to car finance. Take the amount you believe will cover a car installment, running and maintenance costs, and put it aside in a savings account for about 3 to 4 months. Why, you ask? Because you'll get to experience the month without having that money, and will see firsthand if it's doable. If you're comfortable that it is, take the cash you've saved over that period and use it as a deposit. Number 2, wants versus needs. Be honest now, being straight up about your needs versus your wants is something you'll thank yourself for later. What do I mean by this? You want to drive a Ferrari, but all you actually need is a set of reliable wheels to get you to work. Almost nobody gets a sports car or a luxury 4x4 for their first car. Start with something practical and work up to the sexier stuff later. There's also the question of new versus used and the financial implications there. Everyone wants a new car. Who wouldn't? But is it what you need? Maybe take a well-rounded approach in your decision and think beyond the now. A new car has a higher price tag, but a used car may cost more in maintenance for a few years down the line. You need to work out what's going to work best for you, your budget, and your lifestyle. Number 3, stay focused and call your own shots. When you're at the dealership, don't get pressurized. Take the time to make sure you understand the finance structure that the consultant is working out for you. Never hold back on asking questions. Be sure you understand the details and the consequences. Here are some examples of things you may encounter. If there's a balloon payment, it reduces your installments, but you shell out more interest in total. Also, you'll have a large lump sum due later. Check out our podcast in this FAQ series that unpacks balloon payments in more detail. If you have a longer finance period such as 6 years rather than a shorter one such as 4 years, you pay less every month, but it'll cost you more interest in total. If you have a linked interest rate, your monthly installment will go up every time the prime lending rate goes up. So be prepared to budget for that too. Listen to our podcast on fixed and linked interest for a deeper dive into these options. Number 4, it's only approved when you say the word. When your finance is approved, you still have a choice whether to take it up. It's not like you're locked into a finance agreement just because your application was successful. So take a deep breath, weigh your options, and make the choice that's best for you.
Thanks for listening. We hope that you found it useful. Now go and subscribe to be notified when our next informative episode is available.